Assalamu alaikum and good afternoon, everyone. On behalf of Resources Future, I'd like to extend a very warm welcome to all of you joining us today. Thank you for taking the time to be with us for today's webinar, Unlocking Climate Finance from Concept to Capital, where we will be looking at how Pakistani corporates can mobilize green capital. My name is Minha Hanif, and I'll be your moderator for today's session. We're delighted to see professionals joining us from across different sectors, and we're glad that you've chosen to spend the next hour with us. While people are joining, maybe we can go over some housekeeping points. So today's webinar will run for approximately 1 hour. We encourage everybody to keep their microphones muted throughout the session. If you have any questions, please feel free to type them into the chat box, and we'll collect as many questions as possible and address them during the Q&A session at the end. So before I introduce our speaker, I'd like to take a moment to tell you a little bit about Resources Future. At RF, our mission is to help organizations move from climate ambition to implementation. We work with businesses, governments, development partners to design and implement high impact climate finance opportunities. By this, I mean that beyond advisory services, we support organizations in structuring and facilitating climate finance and carbon markets transactions. So, connecting high integrity projects with investors, buyers, and funding partners to help turn climate initiatives into bankable investments. So, one thing that we have consistently observed is that climate finance is often viewed as something reserved for governments or large international organizations, where in reality there are growing opportunities for private sector to access green capital. But understanding where those opportunities exist and how to position projects effectively can be a little challenging. And that is the reason behind why we're organizing today's webinar. It is now my pleasure to introduce today's speaker, Aisha Nazir. Aisha is a climate finance and international development professional with more than 6 years of experience working across climate finance, program design, donor engagement, and international development. At RF, Aisha is our private sector climate finance lead. She has worked with some of the world's leading climate and development institutions, including GCF, UNEP, USAID, and FCDO. So, academically, Aisha is also a Fulbright scholar and holds a master's degree in international development from the University of Denver, where she graduated with distinction. So, without further delay, I'll be welcoming Aisha. Aisha, the floor is yours. Let me just put up your slides.
Thank you so much, Minha, for the very kind introduction. Just want to make sure I'm audible. If I could just get like a thumbs up. Okay. I'm assuming that I am audible.
Yes, I can hear you.
Okay, awesome. Thank you. Right. Thank you again, everyone else, for taking the time to spend this sort of journey from concept to capital with us. Like Mina explained, at Resources Future, we are trying to find the best way to mobilize climate finance for climate solutions, essentially. And the topic of this webinar speaks to exactly that, unlocking climate finance from concept to capital. The gap here between concept and capital is the gap of access, right? Which we're intending to close for you. And I'll try my best to take you through what that gap means, how to close it, how we at Resources Future can help your organization, your startup, your business to sort of meet that gap, and hopefully mobilize climate finance for Pakistan together. Next. Right, just a quick overview of what we will go over today. It's important to understand what climate finance really is, right? We hear this buzzword thrown around a lot. So I will walk you through a little bit of what climate finance is, what are the sources, types, what really the access problem looks like. how we at Resources Future can help you mobilize it, what a successful mobilization, a successful climate project might look like, what are some of the examples that sort of gives us the proof that it actually works in real life in Pakistan and in other developing countries around the world. And this is sort of what the next 45 minutes to hour will be structured around, and we'll be taking questions at the end as well. Next. Right. So getting right into it, what really climate finance is. We've heard this word thrown around a lot lately, right? We're saying we're moving from development finance to climate finance. Is it aid? Is it investment? Is it only given to governments? Is it only given to INGOs? So there's a lot of elusiveness here, and that exists primarily because we don't really have an agreed upon definition of climate finance. We have the UNFCCC definition, but it's not necessarily something that all organizations or funders use. It's just sort of a concept to build on. But if you want to go at the core of what climate finance is, if you really want to understand what it is, right, it's money. It's essentially money in the form of grants, loans, equity, guarantees, which is given to climate projects. Now, these projects can intend to either reduce the GHG emissions, or they can help us adapt to the effects of climate change, which essentially means that climate finance is money that moves towards projects that are mitigation, which targets the cause of climate change, right? GHG, increasing GHG gases, or adaptation, which helps us deal with the effect of climate change, right? Increasing floods, increasing weather variations in agriculture and other sectors. So climate finance is essentially divided between mitigation solutions or adaptation solutions. We'll see that most funds tend to merge these two because there is overlap, but we can get into that later. Now, a very important part of what climate finance is that it flows from public climate funds. Again, we'll go over what these funds are later, to private sector projects. So it's not just a pot of money that you can just pick from. It has to flow through a channel. The channel is sort of complicated, which is why we're having this session. Next, please. Right. So to understand how we can access climate finance, what are the instruments, it's important to understand who really gives climate finance, right? Who is funding it? And important entities to understand, of course, there's a lot of smaller, bigger firms, there's national governments, there's other agencies, but these 6 are sort of some of the main large funds that we want to look at. And then these channel funds into other smaller funds. Starting with the Green Climate Fund, you may have heard of it. It's one of the largest climate finance fund, which means that all the money that goes into the Green Climate Fund is dedicated primarily and only to climate finance projects, right? Which is why it is the largest fund in terms of volume, and it's dedicated only to climate finance. So not education, not infrastructure, just climate solutions. And then you have the Global Environment Facility and the Adaptation Fund, which serve similar functions. That's in the way that all of the money that is pooled in these funds has to go towards climate solution. But then Jeff looks a little bit at biodiversity. Adaptation Fund only looks at adaptation projects. It's an important distinction to understand here that private sector firms, businesses don't just qualify for mitigation solutions, right? You're not just increasing efficiency or reducing GHG. You can also qualify for adaptation fund. If your business helps us adapt to the effects of climate change, you qualify for these funds. An important funder here, of course, is the World Bank. Now, the World Bank is primarily known as lending to governments. It's a large-scale lender, and it lends primarily to the development side, but it also lends to large-scale climate projects. The way that the World Bank functions is that the money has to go through the government to then either INGOs, NGOs, private sector. So it's a channel that private sector can't necessarily directly access, but if you do want to access World Bank money, you go through the IFC, which is the International Finance Corporation, which is the World Bank's private sector arm, specifically for private sector, and it operates in sort of similar instruments, loans, equities, guarantees, which we'll go over later. And you'll notice that IMF is also here, which is interesting because IMF is usually known as the last resort lender, right? It's a lender to the governments. What is it doing in climate finance? So IMF has around over 1.3 billion US dollars reserved are sort of allocated for Pakistan primarily, contingent on a range of climate reforms that they're calling. And so, similar to World Bank, a lot of that money is going to trickle down to the private sector. So it's important to know that while money flows maybe directly through a different source to the private sector, at its main source is lender like IMF or the World Bank. And so they have their own rules, requirements, regulations, which is why you may see some private companies getting that loan or grant and some not getting it. Next, please. Right. So, okay. So you understand where climate finance comes from. You understand what it is. You understand what your solution is. How will the money flow? It won't necessarily look like free money. It comes in multiple forms, starting with one of the easiest forms, which is grants, which more or less is free money. You don't really have to pay it back. But because it's free money, it comes with a lot of conditions. It helps you sort of set up in the beginning. Then you have the sort of second stage, which is concessional loans. At the end of the day, it is a loan. But when we say it's a concessional, it means a little bit easier. It means the rate at which you're getting it is going to be significantly lower than market rate. Then you have equity, which is another instrument where essentially what we're doing is we're giving the fund a share in your business. It's riskier, so it may come for large scale projects. It may require you to prove your feasibility a little bit more than maybe someone who's giving you a grant. And then guarantees, which are some of the least explored instruments, but very, very important when we want to de-risk a new idea, right? When you want to introduce something that hasn't been done in the market before, but it's large scale and scaling requires a lot of money. And investors are sort of scared to put their own money in because it's risky. A lot of green capital is still new, it's risky. And so these funds come in and sort of guarantee what the investors are offering you and say that they'll take the first loss, which de-risks your entire sort of system. If you want to look at these four instruments, the best way to see is that grants get you started, loans and equity help you build, and guarantees help you get other people's money, right? And help you sort of get the yes for that money. A lot of these funds will not necessarily give you either grant or a loan or equity. They expect you to merge them together, right? If you have a good idea, they may give you a grant for the first year, and then they'll say, okay, maybe for the next 3 years, we're only going to give you a loan because we expect you to generate some money by then. So it's sort of a mix and match process, which is complicated and it's unique to every project. So the financial structuring is very, very important to actually be able to get that money. Next, please. Right. The reason why we're here, right? The access gap. We say that there's billions in climate finance. We hear that word being thrown around a lot. We hear that number. We hear that Pakistan isn't really meeting its potential for climate finance. You know, the GCF has an entire private sector facility and Pakistan private sector firms aren't really able to access it. So why is that happening? A lot of these applications, they require really, really complex concepts, proposal design, right? The application process is long, it's multi-stage, it requires you to do feasibilities, pilots, whatnot. It needs to show that you understand the technicalities of what you're saying, but at the same time, it requires you to understand the process of the application, right? It expects you to understand how the portal works, for example, right? Who to reach out to. They might reach out to you maybe 2 months after you sent in an application. So it requires a lot of time, resources, technical understanding that requires input on its own, right? If you're a startup, you might not necessarily have time. You might not necessarily have the capital to sort of work on these complex applications. At the same time, they also require you to show some level of feasibility, right? They want to see whether your project, whether your idea is technically feasible. And then they also want to have ESG safeguards, MRV system, legal due diligence. What it does is that a lot of these funds have to make sure that your ideas, your very market-friendly, bankable projects are not causing any further harm to the environment, to the social structure. They're not causing any gendered harm. And then they also want to make sure that you have the ability to continue making progress in your innovation in your business and then be able to report it, right? They want to make sure that you understand that you can show fair accounting, that you can show how all of the money is being lent forward, where it's being used. Can you tell them that the money that they put in risking for your venture is actually being used exactly where you said it would? And then the most important part, bankability. Ideas may be great, but they're not enough. These funds require you to understand that these projects must have some sort of revenue backing. You should be able to show that the idea, important for climate, important for the world, is also bankable, that it will generate revenue, that it will be able to create space in the market for itself in case it doesn't exist. And this sort of access gap is what I'll be delving into next. Oh, I'm sorry, I just got a comment that there's no sound. Can someone confirm that we have sound?
Yes, I can hear you, Aisha.
Okay, perfect. Sorry if we're having any technical issues. Maybe check your mic and speaker. Right. Moving on, as I was saying, so this access gap is very, very important because in the next 45 minutes is what I will explain how we can help you meet that access gap, how we, working with you, can actually help you get money for your idea. Next, please. Right. We take you from concept to mobilization, right? At Resources Future, we understand what the process is, right? We understand that it's difficult, it's bureaucratic, the applications require a lot of hours, they require a lot of technical understanding, they require knowing where your idea falls in, right? Is it mitigation? Is it adaptation? Is it energy? Is it industry sector? Where does it fall? All of those little variables impact whether or not you're actually going to be able to mobilize money. So let's look at this journey that we work with you. We take a look at your needs, your opportunities, sort of a quick analysis. Do you have an idea? Do you have a problem that requires solving, right? Do you have a climate problem? Does your sort of setup requires greater energy efficiency? Or do you have a product for better access to clean water, for example, simplest example, right? These things can fall within needs or opportunities. We do a quick analysis with you, we get the information from you, and that helps us get to the next stage, which is forming a climate rationale. The climate rationale essentially is to show that you have a climate solution. Whatever problem you're seeking money for actually leads to a climate solution. It's actually going to help us either in mitigation or adaptation. To understand this climate rationale is where you start to understand that the money that you actually need for your problem is climate finance. And then we take you to feasibility or sometimes piloting. A lot of these concepts might be great in theory, might be great on paper, but sometimes they might not work in Pakistan, they might not work in that specific sector. Sometimes there's a lot of risk factors that we're not considering. Maybe it requires some more research. Maybe it requires you to understand the political economy at the time. Maybe it requires you to do some testing. Maybe it requires you to do some piloting of the technology. Maybe it requires you to see whether the market will actually buy the solution. So all of sort of this falls within the technical and financial feasibility. And sometimes the piloting is just something that we design for you, with you. And all of these cases are very unique. So a feasibility for a project in agriculture or irrigation might be very different for a feasibility in a project in fertilizer, even though they fall sort of within the same sector. And sort of once you have a clear idea of what your idea looks like, what your concept looks like, is it even feasible to implement? We go towards fund matching, right? Because we explored that all of those funds that we have different ways to access them, right? They have different functions. Some might only fund mitigation, some only fund adaptation, some give you loans, some require you to have some money of your own, some will give you a grant, but a very small amount. So depending very much on what your idea is, what your needs are, where you are in the stage of needing funding, the fund that we will match you with will differ. And it's going to be an extensive process. Just, you don't want to get to the wrong fund because say, for example, you spend 4 to 5 months on designing your feasibility, go to a fund, you apply under the wrong theme and you're rejected and all of your sort of hard work is now wasted. You have to start from scratch. So matching your idea to the right fund is incredibly important. And then from within that comes instrument design. It doesn't make sense to ask for a grant from the IFC, right? Because that's not what it gives you. Most of the time, they'll give you some sort of a concessional loan. It might put in equity in your business. So depending on what you need and depending on what the fund offers, the instrument, the financial instruments based through which the money is being channeled from the pool to your business, it's going to differ. And designing that requires a lot of financial expertise. It requires getting a lot of understanding of where your business is today, where it plans to go in 5 years, and what sort of revenue are you generating, right? And within that falls then the next step of compliance, ESG, legal issues, which we spoke to, right? A lot of these funds have very, very strict and stringent compliance requirements, right? They want to make sure that the money they put in does not cause any risk, does not cause any harm. And so that requires a lot of resources towards understanding the risk to begin with, having very clear policies, implementation frameworks that make sure that you're not causing any extra harm. You're rather benefiting the people that you're working for, right? Your solution is not harming the environment. You not only have to make sure that you actually do that, you also have to be able to show it and prove it and report it, which is extension reporting on its own. That's something that we specialize in and also help you go through, right? You don't have to worry about, well, GCF has a different format or the World Bank has a different format of reporting, right? We understand all of those formats and we match them to what your project needs at the time. And then once you have all of these things done, you're ready to sign the contract with the fund and then mobilize finance, right? But that's not really where the journey ends. It's essentially where it begins because now you have the money. You have to actually implement the initiative that you promised you would, right? You have to implement it. You have to report it quarterly, yearly, depending on what the fund requires to make sure that you get further money, right? To make sure you actually scale it. And that's something that we co-design, co-work with you as well. We're with you through implementation, reporting, to make sure that you meet all of the requirements and continue to get the funding that you need to scale your solutions. Next, please. Right. So what is RF bringing to the table? This is the process. These are the funds. Why is Resources Future doing this webinar? Why should you come to us to help you co-design this? The problems that we spoke to in the access gap, right? These are sort of the solutions. We say one of the biggest issues, bankability, right? We want to make sure that the project or solution that you're offering actually generates revenue. And that's something that we can help structure. There's a difference between having a really good solution, having a very good product, and then bringing them together to show that they're actually a climate solution that also generates money. We're touching different spheres, and all of them come together to make sure your project is bankable. We help you meet your ESG and safeguard requirements through reporting, through presence in the field, through an understanding of what these structures look like, right? If you have done maybe only financial reporting, right? You understand auditing, for example. ESG reporting is a whole other field. And to be able to do it properly, you need to understand what it entails, what it requires. What we do is we sort of take the load off of you for doing that, we take that burden off of you. And we do that reporting for you. We make sure that whatever your solution is, however it's being implemented, it's compliant to the funding requirements. Similarly, fiduciary and legal requirements are a whole other ballgame when it comes to climate finance, right? You have environmental law, you have climate law, you have local, national, international level laws, right? Fiduciary governance systems, right? You have SECP requirements. How does climate money sit within an architecture or a structure that isn't necessarily designed to work with climate finance? We sort of help you navigate that, right? What do you need a bank account in Pakistan or not? How do you get that grant money? How do you report it? What sort of contract are you signing? What sort of environmental law plays into sort of the whole mechanism here? All of these requirements, these details is something that we work with you to design together. And again, right fit matching, making sure that your solution, your product, your bankable idea, it matches the right fund and it has the right instrument. So we have a team of experts that take you through this entire process that help you fill the sort of gap between what you need right now. You understand you have a climate solution, you understand you have a climate problem, and you understand that there's a pot of money sitting somewhere. And we take you through the journey of, okay, well, how do you get that money? Which pot is actually right for you? Can you even get it? And if you get it, on what terms do you get it? This is sort of our expertise here for you. Next, please. So what do you need to do? All you need is an idea at this stage, right? You have an idea or a problem, no matter what stage it's at. Maybe the idea just exists in your mind, right? You've just discussed it with your team. You have a sustainability team. You have sort of production team, and you've discussed the idea with them. It doesn't exist on paper. Come to us, discuss it with us, and we'll turn it into a structure that matches what some of these funds might need, right? Maybe you already have a proposal designed, but you don't know what fund to take it to. So wherever you are in that stage, you can come to us to make sure that you reach the final stage, which is mobilization, right? Signing the deal and getting that money and then starting implementation. So if you come to us today, for example, right, depending on your needs, on the kind of project you might need, within 9 to 12 months, we'll close a deal for you. Again, contingent on the type of idea you have, maybe you need less than 12 months, right, depending on where your progress is. So set up a call with our team and we'll walk you through it. Next, please. Right, so just to make it a little bit easier for you, right, like what it might look like. So for example, you are a cement producer and exporter. And starting January 2026, CBAM, which is the European Union's carbon border adjustment mechanism, has come into effect, and it affects Pakistani cement producers. Now, if you're not already assessing what your GHG emissions are, if you're not assessing how efficient your production is, what kind of impact it's having on the environment and climate, you might, if you're not able to provide those very, very extensive reports to the European Union, you might end up paying a very high flat fee on top of the exports. And so here is the gap, right? Here is the problem. And what Resources Future does is that we'll turn this into your climate rationale, right? Decarbonization of the cement sector is a priority for a lot of funds, right? It's a priority for the European Union because CBAM is sort of their policy. And to continue to have that market access, you need to be able to provide those compliance requirements. Not only do you need to be able to tell them what you're emitting, you also want to reduce them so you don't pay the extra fee, right? You also want to be able to get to consumers who want a green product. So turning this gap into an opportunity, into then a concept note, and then a proposal that then might get funding is what will sort of help you go through. And I'll walk you through some examples of some of it that's already been done in the next slide, please. Right, so if we go to Egypt, for example, GCF, in partnership with the European Fund, sort of funded a green economy financing facility. Now, what they did was the GCF pooled some money, the EBRD put some money in there, and in this co-financing structure, they created a financing facility. What that facility does is that channels GCF funds and EBRD's funds further down to banks in Egypt. And then those banks lend at a very low rate to businesses in Egypt. What for? To reduce their energy consumption, to reduce their carbon emissions, and to reduce their water consumption, right? So you have a climate solution, it's mitigative, it's adaptive, excuse me. And it's being funded for the business, it's being funded by the bank, right? But the project itself is being funded by GCF and EBRD. So if you're a business and you want to access GCF money, for this particular project, you understand that you actually have to go through the bank and then to get to GCF, right? But the trickle down is still happening. The private sector is still being involved. The how of it, how you can access, whether or not you qualify, is a different understanding, which something similar can be done for Pakistan, right? You have Pakistani banks who are ready with concessional credit lines for example, the textile sector. And to understand whether or not you fall into that, whether or not you're able to access it, is something that we can work with you. If we go to the next slide. Right. Now, this is an example that you'll see is in Pakistan. So in, thank you. Excuse my voice, I've been talking for a long time, which means I'm very excited for everybody's questions. Right, so now we're looking at an example of a project that's in Pakistan. The Mitigation Action Facility, which its name suggests, is a fund that funds primarily mitigation projects. A startup at Lums started a pilot for battery swapping stations for electric three-wheelers, which are rickshaws. And it managed to mobilize 8 million euros from MAF. Part of it was grant and part of it was concessional financing. That money is going to go through HPL and Mizan to then give loans to rickshaw drivers so that they're able to access these batteries. So if you look at the way that these two projects are structured, right, you have the private sector sort of benefiting, either whether it be the rickshaw drivers, right, because they're entrepreneurs, right, or it be the startup from Lums, or it be HBL or Mizan Bank, right? We're all in different positions in different places in this sort of whole map. And so money is coming from GCF, money is coming from other aspects. They're pooling their money together. And where you, whether you're a bank, whether you are a commercial producer, whether you're a manufacturer, whether you are a startup founder, whether you just have an idea, right? You don't have a startup right now, you don't have a business right now. Where you sit in this whole sort of mechanism, in this whole function, is complicated to determine. But at the end of the day, you want to access. So sort of determining where you sit, which fund to go through. Is there something that already exists that within Pakistan that you might benefit from? That's sort of the work that we do with you. Next, please. Right. So tell us what your climate idea is. Tell us what your business is. If you have questions, if you have ideas, if you think you're close to a project, but you need help with designing your MRV system, if you already have a good solution, a good product, you know it's bankable, but you don't know if you require a grant, you don't know if you require a loan or equity, you don't know who is the right person to give you that loan, come to us. We'll work with you, we'll work with your team, and we'll show you how the process works, where you are in that process, how you can benefit from this system, and essentially how you can close that gap between your solution and actually accessing climate finance. Thank you, everyone. If you have any questions, ideas, comments, happy to take those. If you want me to go back to any slide, spend some more time on those, happy to do that as well. If anyone has any ideas. Okay, I think we have a question, Minha.
Right, let me just unmute you. You should be able to unmute yourself now. Abdullah Shahid.
Yes, can you hear me, Aisha?
Yes, I can hear you just fine.
So what I want to know is that in Pakistan, there is the Pakistan Green Taxonomy 2025, which gives a classification of what qualifies as green. But are institutions in Pakistan actually following this? Because this is not binding. Is it being followed?
No, that's a very good question. So at the moment, like you said, right, it's just been introduced and it's not binding until 2029, I believe. So while it's not binding right now, it will be soon. And to be able to meet those requirements requires a lot of work, requires a lot of effort, right? You have to introduce policies, you have to change your structure, you have to understand, you have to introduce definitions, you have to understand how these compliances work. And that takes time, especially if you're a large organization, if you're a large manufacturing facility. So while they're not binding today, to be able to be compliant to them in 2 years, in 3 years, you need to start working on it today. Unfortunately, it's not necessarily always the case, but I think we have a lot of business forward organizations that understand this. I think we have some comments in the chat. Resources Future is based in Islamabad, and we will share our contacts with everyone, so you're able to reach out to us.
Assalamu alaikum, Aisha.
Hello.
Assalamu alaikum. Can you hear me, Aisha?
Walaikum Assalam. Yes, I can hear you just fine.
Aisha, my name is Naveed and I am from Sirat. I have a quick question. Do we have any database or citation or a list of library from where we can see that who has benefited from this opportunity of climate finance in Pakistan, specifically in the context of Pakistan, so that we can get the inspiration of how this market is moving in the country and all this?
Right. Yeah, I think your question is quite valid. It's very important for transparency for us to know what is being funded in Pakistan. There's a few different ways that you can find out. You can go directly to the websites of all of these funds, the GCF, Adaptation Fund, World Bank, IFC, and then you can go to the specific country, for example, Pakistan, and find out Pakistan mein kitne projects hain, who is being funded, has the money been given out yet or not? And you can even look at what the concept looks like, right? So there's a lot of transparency on these websites. Alternatively, you can also go to the website of the Ministry of Climate Change. It also maintains a list of different funds, what's being funded. In terms of how often it's updated, I think the funds website might be a little bit early on that, but there's a few different sources where you can get that information. Private investment is a little bit more difficult to track, but depending on how large the investment is, there's a few different places where you can get this information, but not a consolidated list as of yet.
So you are saying that most of the opportunities of climate finance are derived by the public sector and not the private sector?
At the moment, yes, which is also part of the gap, right? Right now, what we call these large funds and what the government funds essentially is public sector climate finance. But in essence, what climate finance does is the goal of all of these funds is whatever solution you have is marketable. It needs to be able to sell. So it needs to have a climate impact, but it should also be able to generate revenue on its own. And so its natural source is private sector finance. But because it's riskier, a lot of big private sector investors might not necessarily invest right now. So what these funds do, GCF, IFC, all of these other climate funds, they help you reduce the risk. They help reduce the risk for these private sector investors to encourage them to take up more of the share of climate finance.
So Abdullah Shahid is raising the hand. So I think we should give him an opportunity. There is one more question that I will ask after.
You could put it in the chat and we could come back to it later as well.
Yes, so what I want to know is that how do you determine that what kind of instrument you're going to use for a specific case? Is there an objective list that you have, some underlying factors that you see? What is it that helps you decide that what kind of instrument is going to apply?
Unfortunately, there's no standard way that applies to everything. Each solution is unique, depends on which stage you are at. If you are just in the early stage, if you're in a pilot stage, you don't need that much money. The instrument is different. If you are in agriculture, if you're in large scale manufacturing, if you're in textile, opportunities differ by sector. So it's very tailored. That's one of the issues as well and gaps of climate finance, right? Each proposal, each instrument, each financial model has to be tailored to that specific concept, which is why it's not always easy for businesses and startups to do this on their own. I hope that answers your question.
Yes, thank you. And what kind of which laws or guidelines do you use to as a terms of reference. Like there's the state banking, green banking guidelines, I guess, and the SECP's green bond guidelines. What is that you used as a term of reference for due diligence?
So yes, you're right. SECP's guidelines come first for projects that are based within Pakistan's geographical boundary. But each of these funds have their own guidelines and requirements as well, where they're coming from. So the financial law that you have to include and understand comes from the laws of multiple different entities and countries, depending on your project, right? Like I said, very tailor-made requirements. I think Farhad has a question. I can look at some comments meanwhile. So our email and information has been shared in the chat. In case you have a longer question, if you want to set up a meeting, you can always reach out to us. Right. Biogas project. I think that's a very great project, and we have a lot of questions. What I can say is that you can definitely access climate finance for it, but we'd be happy to have a longer conversation with you and explain to you what the process is, what the fund is. Minha, can we unmute Farhad?
Yes, Farhad, you should be able to unmute yourself.
Can you hear me?
Yes, we can hear you just fine.
Yeah. Okay, perfect. So my company, Magnacrete in Karachi, we manufacture concrete blocks and stuff. So I have a couple of questions. We have just completed a conversion. We were solely reliant on natural gas for our power. We have now gone completely off grid. We've got solar and batteries. We run 24 hours on solar energy. Is there a way to like get some sort of benefit from that, even though it's been implemented? Question number one. Question number two is, what kind of guarantees would we have to give? Like a personal guarantee. Do we have to have to mortgage our property? Stuff like that if we want to get financing. What kind of interest rates are we looking at when you say concessional? What do you mean? And also, if you talk about the time period of the loan, the tenor, what kind of tenor are we looking at? The legal system, will it be the Pakistani courts that will oversee any disputes between the lender and ourselves? What else? Yeah, any way to protect ourselves from rupee and dollar devaluation. And I think that's pretty much about it for now.
Okay. Thank you for your list of questions. I really appreciate your interest, and I appreciate you joining our session, listening in. So I think I'll start with the first one, right? I think if you've already installed them, there's a few different ways to access climate finance, depending on how you're using them, what your facility looks like right now. I'm not necessarily sure that you can get funding for something that you've already implemented. But if you're looking to scale, if you have a limitation of, okay, well, we've connected a small part of our production to this, but now we need more, then that's a conversation, that's a proposal that can happen. For your next 3-4 questions, it's all variable, right? So just take the example of GCF, right? It signs different contracts for every single deal that it has for each proposal, which means the financial instrument differs, the rate of concessionality differs, the loan tenor differs, the co-financing requirement differs. Most of the times, yes, it is Pakistani law that looks over disputes and other issues, but GCF has its own internal, very, very high compliance requirements, beneficiary complaint mechanisms, very, very extensive requirements of stakeholder consultations. So you have the Pakistani system at one side, and you also have GCF's own internal requirements, which they have different categories for what kind of risk they expect from your project. But all of your other questions, they are available, depending entirely on what your project looks like, who your co-financers are. If you'd like to understand more, you could reach out to us on the email, and we're happy to have a conversation about what it might look like for your particular business. I hope that's helpful.
Hi, Aisha. Maybe if I could quickly just come in. I would like to add, depending on the scale of the project and how long ago it was commissioned, it could be worth looking into this as a carbon project opportunity as well. So I lead the carbon markets desk at Resources Future, and I would really appreciate if we could get into maybe a one-on-one discussion on this and see if there's an opportunity for this project. Abdullah Shahid has his hand up. Maybe you can go next.
Yeah, so lastly, what I would like to know is which specific funds have you been working with in Pakistan, and especially in the private sector? Can you give us a list?
When you say which funds have you been working with, do you mean what funds do we see as solutions for different businesses? Or so the funds that work in Pakistan primarily that we have interacted with as well include the GCF, the Adaptation Fund, the JEF, IFC, World Bank, ADB, and a bunch of other smaller government to government sort of funding situations. And these sort of work primarily with governments, INGOs, and private sector. I'm not sure about a list, but if you're interested in more information about the way that Resources Future works and sort of what kind of funds we work with, what sort of clients we work with, we're happy to have a detailed follow-up meeting. All right, I forgot to mention, we also work in carbon markets to raise climate finance, as my colleague Minha is sharing. If you'd like to know more about that, happy to set up a meeting on that as well. I think Dr. Naman has a question. I think they've had their hand raised for a while.
Thank you. Thanks a lot for the. I just want to add something that by profession I'm a veterinarian and I'm running feedlot farms in Pakistan right now in Punjab and Sindh. And as I am very directly related to the production of the methane production, and definitely due to the production, what we actually did that we brought the animals from the market and we produce the meat from them with the feed efficiencies, and we try to do that the most good resources and the medicines to get the more valuable meat as compared to the which is available on the on the higher carbon cost available in the market. For example, if a farmer which is not adopting the protocols, he will produce the more carbon by producing 1 kg of the meat as compared to my company, as because we are using some sort of good nutritional protocols and health management protocols which help us to produce the low carbon into the air. This is my understanding, and I want to shift it into to how I can get the carbon credits on it, and what would be the basic of it, because I'm related on these production sides. So I just want to know how I can, which is in my mind, that we are actually producing the low carbon as compared to the other corporate farmers in Pakistan, and how I can convert it into the carbon credit thing, and how you guys actually help me to opt these particular, the protocols and the things that I can define on my company's on site.
Right. Minha, would you like to take this?
Yeah, thank you. Thank you so much for your question, Dr. Naman. So there are a few methodologies that are available for livestock management, and it would be great to see the scale of your project. So for example, how many cattle are present, what the feedstock is, how are you handling their waste. So all of these can count towards the carbon emission reduction. So it would be good to have like a little bit more context about the activities that your project entails, and then maybe we can further develop this into a project.
Yeah, sure. I will email you about my sites, which is available in, there are the 6 sites in Punjab and 1 site in Sindh, and the number of animals which is available on each farm, and what the protocols we are using right now. And I think that would be good. That's good information for you, which is to start with that.
Yes, thank you so much.
Yeah, okay. I'll email you about all these things. About my the how many animals it is about right now. It is 2,000 animals, which is and we actually targeting the 10,000 animals in a year for the cycle, and we are using the 3-month cycle of the buying and the slaughtering till slaughtering. Then I'll give you the complete information through the email too.
That is good to know because if you plan on scaling it up, that makes it easier for us to structure it as a project. So when we talk about additionality, it's always good to have some baseline numbers and then some projected expansion. So if you could share like all of these details end to end, perhaps over email, then maybe we can get in touch.
Yes, thank you.
Thank you.
Thank you.
Do we have any more questions, comments? We shared our information. Abdullah, thank you for sharing information on your company. What sort of services do you offer to construction companies? And of course, depending more on the nature of the business. I think there's definitely a lot of space in the construction sector to reduce GHG emissions and to mobilize climate finance, depending on your sector. See, that's a very interesting subsector. There's a lot of different ways we can work with you in terms of emission reduction and helping you raise finance for reducing those emissions. For more specific understanding of how it would happen, which part of your business, what sort of finance, we're happy to have a follow-up meeting. You can reach out to us on any of those emails, and we can meet with you to discuss what sort of methods, what sort of financing might be good for your specific business. If we don't have any other questions, you can always reach out to us. Again, we can answer your questions. We can set up a meeting. We can work with you in terms of carbon markets as well. Yes, you're right. Yeah, that's one way of looking at it for sure. Again, the scale of this, the sector, the region, your existing financing, any ESG mechanism, all of these work. Sana, thank you for sharing that. We keep having these sessions, so keep checking out our website, our LinkedIn page. We put them on our YouTube, and we share the recordings with everyone. We will be having more sessions on climate finance, carbon markets. We already have a lot of sessions on carbon markets. We also have a free carbon markets tool to help you find out whether or not your project might fit into that. So you can check that out on our on our website. And you can check out our existing sessions. If you still want more information, if you think you have a project we should look into, send us an email and we're happy to speak with you.
All right, great. Thank you so much, Aisha, for this very interactive webinar. I'm just going to go ahead and paste the link to the carbon credit calculator tool in the chat. And if there are any more questions, please feel free to send us an email. For everybody that has interacted, we would love to stay in touch with you and perhaps have a one-on-one meeting. Please look out for our social media for the recording of this webinar, and we'll see you in the next one. Thank you so much.
I think we could share the link to our website, but you can just put resources future on LinkedIn and we will be right there. Right, that's the calculator right there as well.
Thank you, guys.
Thank you, everyone. Really incredible questions that you all had. Great concepts. Lovely to hear about them.
All right, bye. Thank you.
Thank you, everyone.